Well, good evening, guys, and welcome to another episode of Wealth and Wisdom. My name is Bree Smith. I'm a licensed insurance broker, financial literacy educator, author, and speaker. I'm also the founder and CEO of Bree Smith Financial Group, a financial services company whose purpose is to educate clients on various financial strategies, products, and services that can help them to improve their overall financial well-being. And tonight on Wealth and Wisdom, we are going to be discussing how to obtain funding for your business. A lot of us, that has been the number one thing that we have been facing in our business, right? We may have these great ideas, we may even have great business plans and all that stuff, but it's the actual coming up with the actual capital we need to be able to either grow our businesses or sustain our businesses and things like that. And so without further ado, we're going to jump right into tonight's topic. And I pray that it blesses you just as much as this has blessed me. All right. So why do people or even businesses need funding? Okay. Why do businesses need funding? Well, first and foremost, businesses need funding because they may need working capital. And in short, working capital is the money available to meet your current and short-term obligations. Working capital can affect many aspects of your business, from paying employees and vendors to keeping lights on and planning for sustainable long-term growth, right? Another reason is for startup costs, right? So in the beginning of creating your business, right, you may have incurred a lot of costs, right? And you need to be able to cover those costs, such as for advertising and marketing, purchasing or renting office spaces, obtaining a lawyer, and possibly even getting a bookkeeper and setting up payroll, things like that. You may have certain insurances and things like that you have to pay for, getting inventory, getting supplies, paying actual employees salaries. If you're not the only one that's on your payroll, right? Creating websites and different things like that, right? Another reason is for purchasing assets, right? And assets could be facilities, right? Vehicles, equipment, stock, and inventory. And then last but not least, growth funding. Okay. And pretty much it is what it is. It's funding that is used to help grow and expand your business. All right. So how do businesses traditionally get funding? Well, we know that they do it through business loans. And there are approximately 8 different types of business loans, such as term loans. And term loans are one of the most common types of business loans and are a lump sum of cash that business owners have to repay over a fixed period of time. The monthly payments will typically be fixed and include interest on top of the principal balance. And they may also have flexibility to use a term loan for a variety of needs, such as everyday expenses and equipment and things like that. Another common loan that a lot of people hear about are SBA loans, right, which are small business administration loans, right? And these are pretty much enticing for business owners who want a low-cost government-backed loan. However, SBA loans are notorious for long application processes. That can delay when you will actually receive your funding. And it can actually take up to 3 months to get approved and receive the loan, right? If you don't need money fast and you want to benefit from low interest rates and fees, SBA loans could be a good option. All right. Also, there are equipment loans. So if you need to finance large equipment purchases but don't have the capital to do so, an equipment loan may be something that you want to consider, right? So these are going to be loans that are designed to help you pay for expensive machinery, vehicles, or equipment that your business actually needs, all right, such as computers or furniture and things like that. In most cases, the equipment you purchase will be used as collateral in case you can't repay the loan. Another type of loan is invoice factoring and financing loans. And this is for business owners who struggle to receive on-time payments and may want to choose invoice factoring or invoice financing, also AKA, because it's called accounts receivable financing. Through invoice factoring, you can sell unpaid invoices to a lender and receive a percentage of the invoice value up front. With invoice financing, you can use unpaid invoices as collateral to get an advance on the amount you're owed. The main difference, though, between the two is that factoring gives the company buying your invoices control over collecting the payments, while financing still requires you to collect payments so you can repay the amount borrowed. Okay. Also, commercial real estate loans. Commercial real estate loans, aka commercial mortgages, can help you finance new or existing property like an office or a warehouse or a retail space. These loans account or act like term loans and may allow you to purchase a new commercial property, expand location, or even refinance an existing loan. Another type of loan is microloans. Microloans are small loans that can provide you with $50,000 or less in funding. And since the loan amounts are relatively low, these loans can be good for new businesses and for those who don't have a lot of cash. Microloans are also offered through nonprofits or government like the SBA, though you may need to put up collateral. So like business equipment or real estate, personal assets, and things like that in order to qualify for these types of loans. Also, there's another type of loan, which is called merchant cash advances. So these are just like traditional cash advances, except merchant cash advances come at a high cost. This type of cash advance requires you to borrow against your future sales in exchange for a lump sum of cash. You'll either have to repay either a portion of your daily credit card sales or through weekly transfers from your bank account. While you can quickly obtain a merchant cash advance, the high interest rates make this type of loan a big risk. Unlike invoice financing or factoring, merchant cash loan advances use credit card sales as collateral instead of unpaid invoices. And then last but not least, you have franchise loans. And franchise loans can provide you with money to pay the upfront fee or for opening an actual franchise, right? So you can get that actual business up and running. While you're the one taking out the loan through a lender, some financiers may offer funding to new franchisees, right? So the next thing we're going to talk about is business lines of credit or credit cards. So similar to a credit card, business lines of credit provide borrowers with a revolving credit limit that can generally assess through a checking account, right? So you can either spend up to the maximum credit limit, repay it, and then withdraw more money. These options are great if you're not sure of the exact amount of money that you'll need, since you'll only incur interest charges on the amount of money you withdraw. And this is comparable to a term loan that requires you to pay interest on the entire loan, whether you use part of it or not, right? Many business lines of credit are unsecured, which means they don't need any collateral, right? And I know a lot of people, they go towards that, especially if they can't qualify for a traditional type of business loan. Now, the third type is investors. So a business investor is someone who provides you with capital and expects financial returns. An investor can be a person, firm, or mutual fund. Some common types of startup investors can include personal investors, angel investors, venture capitalists, and peer-to-peer lenders. Venture capitalists venture capital is generally geared towards small companies in the early stages of growth. Oftentimes, venture capital is focused on businesses with high growth potential. Generally, venture capitalists offer funding in exchange for equity in a company. Then you have investors called angel investors. An angel investor is another term for a private investor or a seed investor. This type of business investor provides funding generally to startups or entrepreneurs in exchange for equity in the company. An angel investor tends to be high net worth individuals who use their own money to fund businesses, unlike venture capitalists, which tend to be larger institution investment firms. And then another type of investor, which a lot of people are starting to get popular with, are the crowdfunding platforms. So crowdfunding platforms, as the name suggests, brings together a large number of people who can provide small dollar amount investments to fund businesses. While each crowdfunding investor might only pledge a fraction of the money your business needs, collectively, the crowd can provide enough capital to get your business off the ground. It is a form of financing similar to peer-to-peer lending. However, instead of debt financing, crowdfunding platforms are investment-based. All right. So here I want to go over a few small business financial statistics with you guys. All right. So 90%, I don't know if you guys knew this, but 90% of startup businesses fail. 10% of startup businesses fail in the first year. 29% of startups fail due to running out of funding and personal money. And at least 70% of small businesses in the US have outstanding debt. And as a whole, only 48% of small businesses in the US have their financial needs met. And only 38% of small businesses took out a loan back in 2020 to even expand their businesses. And 32% of small businesses applying for loans now apply to non-bank lenders because they cannot afford traditional, either they can't afford or they do not qualify for traditional loans. 20% of small business loans are denied due to credit issues, right? Because a lot of businesses do not understand how to even establish credit. And there are people out there, there's excellent credit repair companies and credit repair specialists that actually specialize in helping businesses create credit. I also know a way to do that as well, but I definitely suggest you going out there if you are trying to do that, because you should. I would say all businesses should have some type of credit score in case you do need to bring in extra funding for whatever reason, right? Women-owned small businesses receive only 16% of small business loans, and 10% of business owners rely on family and friends for financial support to start their businesses. 9% of businesses use SBA loans and lines of credit to initiate their businesses, and 5% of businesses utilize unsecured loans to start their ventures. Okay. And when it comes to Black-owned businesses, we only receive less than 2% of small business loans. Come on, man, this is crazy. And then only 33% of small businesses will actually survive. And so looking at these numbers, guys, I was blown away. Now, of course, some of the reasons these businesses fail are because they don't have the support of the local communities, or they don't know how to properly market and sell their products and services, nor do they have an actual viable business plan in place for sustainability and growth purposes, right? But like I said, today we want to focus on new ways that business owners and entrepreneurs can actually come up with new capital, right? What are new ways to actually be able to fund your business and sustain it without having to go through these traditional means of having to look at traditional loans, having to get business financing or take out business credit and business lines of credit and things like that, or having to look for investors, and when you can be your own investor. Okay, so we're going to jump right into that now. So there are 3 new ways to obtain business capital. Okay, guys? And I want us to look at this. So the first way is the employee retention credit. Okay. The second way is life insurance policies, which I know a lot of people are like, really, very life insurance policies, but hear me out. I'm telling you, I got a lot of good, juicy stuff on that. And then last but not least, the compound interest investments, which if you listen to my program last week, we discussed in detail about compound interest investments, but I'm going to go ahead and go over that again. But these are 3 new ways to obtain business capital, guys, without having to go through the traditional means to do so, right? All right, so up first, we're going to talk about this employee retention credit. Okay, so it is a broad-based refundable, okay, tax credit that is designed to encourage employers to keep employees on their payroll. This is specifically for businesses with employees that was subject to the government regulations brought about by the COVID-19 pandemic, or that suffered economic losses back in 2020 or 2021 as a result of COVID-19 closures. All right. So the employee retention credit, or also known as the ERC or the ERTC payment, right, was created to provide businesses with a refundable credit. So this is literally like a tax credit, okay, with a refundable credit that can be claimed on wages paid to employees. So the ERC was devised as an incentive for employers to retain employees on their payrolls when the pandemic first began. All right. And so businesses can qualify for up to $26,000 per each W-2 employee kept on their payroll in 2020 and 2021. The average tax credit is $180,000. So that's how much you can get for each quarter, right? For each minimum employee. Now, I want to put a full disclaimer out here about this. Please do your due diligence and your research for yourself, okay, about this, because remember everything that happened with them PPP loans, people was doing illegal stuff, and now the government and the IRS is cracking down hard on that, and people are going to jail, people getting fined. So please make sure that you are a legitimate business, all right? So that's the first thing I want to talk about. If you want to try to apply for this, you need to be a legitimate business that was already started in an operation due, okay? Either you had already before the pandemic or you were in operation during the pandemic, all right? So that means your business is actually registered with the state and you have a tax ID number, or AKA an EIN number, with the IRS. You also must be up to date with your state, not behind on any taxes or anything like that, with the state or feds, okay? Also, you need to make sure you have a business bank account. This money cannot go into your personal account. It has to go into a business bank account, okay? And last but not least, you need to make sure the IRS has your current name and address on file, because they mail everything out to your home. So they have certain paperwork that you have to fill out that needs to come to you. You have to fill it out, and then you have to either overnight it or tax it. Sorry guys, or fax it back into them, as well as your check is going to be coming in the mail. All right. They do not do electronic payments. I wish they were like how they do with the regular tax payments, but they're not doing that. They're only doing paper checks. All right. And the paper check is going out to your business, which means you need to have a business bank account set up. Okay. So I also want to make this disclaimer. Even if you are registered as a sole proprietor, you still qualify for this credit, all right? Because you're still an employee of your business, right? So I just want to put that out there. With all that being said, I want y'all to know a few other things, okay? If you do sign up for this and qualify for this money, please make sure you do the following. Hear me by the word of God. Hear me. Okay. Please do the following. If you are not on payroll, I need you to put yourself on payroll. Okay. If you don't know how to do that, go ahead and find a payroll company like ADP. Let them tell you the steps and everything you need to do to get yourself set up. Also, you want to make sure that you have some type of bookkeeping system like QuickBooks in place. I even suggest you actually getting you a professional bookkeeper to help run your books and run your reports. The reason why I'm saying this is because if the IRS ever comes back and audits you, and they can they can see how you spent that money, right? And they want to be able to see, was that money properly allocated within your business account? So that's all I'm saying. Make sure that you do these two things. All right. I'm not saying that you can't, make withdrawals and things like that from your, because I know a lot of people make owner withdrawals. I make owner withdrawals from my own business. But what I'm saying is, the more legitimate we look, like our legitimate business, like I said, the more we don't have to worry about if the IRS comes back to us and like, oh my God, we're getting audited and all that. Like, we're going to make sure that we do right. That's why I also suggest that people actually create a budget for this money. Don't just go out and spend this money like crazy because it's extra money. No, allow this money to be used to set you up to catapult your business forward. If you need to get ads, if you need to do marketing, if you need to buy extra equipment, if it's time for you to expand and get a space, that's what you use this money for. You don't use this money to be like, oh, I'm about to go get my teeth done. No, we ain't doing that. This money is to be used for that. And also make sure that you are taking out a portion of this money to give yourself a salary, right? Like let's say you're still in the beginning stages of your business, and because you're still building things, okay, use it to build your business, but also pay yourself because you're working your business. All right, don't be dumb. And last but not least, okay, so although this is free money, guys. All right, like I said, the IRS can always come back and audit you. And I know there's a few people out there running scams on this. So that's why I'm saying make sure you do your due diligence. If you already have a certified public accountant, I say work with your certified public accountant and allow them to do the paperwork for you. If you have a lawyer, I know some people already have business lawyers and things like that. Go ahead and have them set that up for you, right? And if you don't have a person, you can always contact me and I can put you in contact with my person who handles all that. But like I said, only reach out if you're a legitimate business. All right. And you meet all the qualifications that I've already named before and above. All right. And so I do want to show you guys my actual proof that I did. I was approved for the ERC credit. I'm still in the process of, getting my paperwork back from the IRS. And once I get all that, I'll be able to get my check. But I just wanted you guys to be able to see that, like I said, I tried to be real and tell people like, hey, y'all, like, listen, this is legit. All right. So I filed for mine back in December. All right. And so my business, so Bree Smith Global, actually qualified for $119,751.07. Now, of course, the IRS is going to take out their taxes. So once they take out their taxes, I'm dropping down to $113,312.33. But still, that's a blessing that I could be able to use in my business. And so that's the reason why I'm showing receipts, because I know people need to see actual proof, because people be like, oh my God, I don't believe it unless I see it. And so I do want to say that I did qualify for this. But like I said, don't reach out to me unless you are a legitimate business. If you are not legit, I cannot help you. And I'm not going to put my name on something that cannot help you, right? Another thing too, another strategy is, I would say that if you get this amount of money back, like I said, in addition to making sure that you're putting money towards your business and that you're actually paying yourself an actual salary, I actually say that I suggest that you take a portion of your money. So I know for me, once I get my money, I'm going to take $10,000 and I'm actually going to invest it in something we're going to talk about later, which is the compound interest investment, so that I can grow this money, right? Because this is free money the government's giving, but I can't guarantee that the government's ever going to give me this amount of money again. So I'm going to take a portion of my money and I'm actually going to put it in there, and I'm allow it to compound over the next year, so that I always have money that is sustainable. And I'm not having to worry about, oh my God, do I got to go get me a business loan? Do I got to worry about my business credit? It's like, listen, I already got the cash to do it. I don't need nobody. I am my own bank. And that's what we have to learn as business owners, to become our own banks, so that, listen, we shut down the whole banking system. They'd be like, wow, people ain't come to us no more. No, because we know how to make our own money. We took out the middleman, which was you, and now we're going directly into these systems for ourselves. And so, yeah, guys, like I said, I just wanted to show you guys that I actually did get this payment. And just like I said, put you guys on game, because somebody else put me on game. And I believe that this is how everybody wins and eats off the same table. Let's stop being selfish and let's start telling people how to get the resources and the tools that they need. I'm not saying don't charge people for your services, but what I'm saying is, let's start actually helping one another, right? Instead of turning each other down. All right. So the next day we're going to jump into the life insurance policies. Now, specifically, guys, I'm going to be talking to you guys about whole life policies. All right. So many small or medium-sized business owners don't know how beneficial a business life insurance policy can be to a successful company. Listen, y'all. How do y'all think that Walt Disney was able to build Walt Disney World? Because he had life insurance. How do you think that J.C. Penney's during the Great Depression was able to keep his business viable and it even lasted this long? Because they have life insurance. Y'all, life insurance, if you're a business owner, you do not have life insurance on your company, what are you doing? You need life insurance, y'all. I'm telling you, we need life insurance. And I'm about to tell you why. All right. So the truth is, regardless of the size, all business owners need whole life insurance. It can help businesses break free from traditional bank loans. It can also help you benefit your employees, as well as it has tax advantages. You can actually earn tax advantages, guys, because it's when you put your money in a life insurance policy, the government can't touch it. Come on now. Whole life insurance for business owners has an advantage many other types of insurances don't. It earns cash value. This cash value accumulates over time due to interest earned and dividends paid. Paid. And as a contractual owner of the life insurance policy, the business owner has first rights to its accumulated cash value. When business expenses arise, the owner can use a policy loan up to the amount of cash value in the policy to cover business costs. Capital is then funneled back to the insurance company, so funds will be available again for future business expenses. Business owners can take out multiple policy loans year after year. Okay, guys. So instead of paying high interest rates to a bank, the business owner finances their own expenses in a way that allows them to recapture the cost of the interest. Regardless of the amount of the policy loan, insurance carriers still have to pay the policyholder interest on the full cash value of the policy, and the policyholder decides the payback schedule, or if you decide to pay it back at all. So the interest rate charged by the insurance carrier is typically lower than a traditional bank loan. And business owners need whole life insurance because it's the ideal place to store capital. All right. So guys, if you are interested in learning more about that, y'all know I am a licensed insurance broker. I would love to sit down with a consultation with you and show you how your business, right, can actually grow and become sustainable over time with having a life insurance policy. You are literally becoming your own bank, right? And now that you're your own bank, you ain't got to worry about going to a bank or any other private lender to get funding, because you are your own bank. Okay, guys? So I also want to talk about this really quick, guys. I'm going to talk really quick about the 3 ways that money grows. Okay, so money grows fixed, variable, and index. So your fixed accounts are going to be your bank accounts, your checking accounts, your saving accounts, your CDs, your money market, right? So typically, if you put your money in the bank, it is safe because it's backed by the FDIC, which is federal life insurance. Okay, so the bank is literally putting your money into federal life insurance policy. And what happens is, instead of you putting it directly into a life insurance policy and growing all that money for yourself and taking all that interest back, they're putting it in a life insurance policy and they're making all this money, okay, off your money, and they're only giving you back 0 to 1% in interest. So that's why every time you look at your bank account, so either you, and you know we do this, you either look monthly, quarterly, or yearly, and you'd be like, man, I only made 2 cents. Yeah, because what they did was they took your money and they put it in a life insurance policy, and they made all this extra money on top of that, all that cash value that they made. Oh yeah, they're keeping that for themselves so that they can be sustainable, because they don't want what happened back in the Great Depression to ever happen again. That's why they're doing that like that. That's why they do it like that. And so that right there, even though it's safe, it's like, really, your bank account, guys, you only need to use your bank account. I'm gonna tell you right now, for emergency fund, which needs to be 3 to 6 months worth of expenses, and for short-term savings goals. Other than that, you do not need to be using a bank account besides just to pay your bills, all right, every day, and just like little purchases every day. Other than that, that's why you use it. You don't use it to grow money, to become wealthy. You don't use it to set yourself up for retirement. You don't use it to try to build business capital. No, we ain't doing that. All right. Now, you will need a business bank account. I'm not saying don't have a business bank account, but what I'm saying is you only want a certain amount of money in your business bank account. All right. So the next way money grows is variable accounts. So your variable accounts are going to be TSPs, 401ks, IRAs, 403bs, stocks, bonds, mutual funds, and cryptocurrencies such as Bitcoin. Now with this, guys, you can get tremendous growth. But the thing is, if you invest directly into the market, there are a few ways that you can do this a little bit more safely, but they're really far and few between. If you invest directly into the market, you can lose all or a portion of your money. And so that's the biggest risk for that. But the thing is, The only way that your money is truly going to grow, you're going to either have to put it in a variable account or index account, which we're getting ready to talk about index. All right. So index funds. All right. So this is going to be either a fixed index annuity or an index universal life policy. They are safe because it's life insurance. It is, the government cannot touch it. If something was to happen in the economy, your money is safe. You ain't got to worry about, oh my God, I done lost all my money. No, baby, because your money has been stored away safely. Nobody can touch that money, not even the government. The only thing we don't like about this is it is capped at 9%. So if the market performs well at 20%, you're only going to get 9% back. But hey, you still get something. Then if the market performs at 8%, you're still going to get 8%. So you're going to get all your whole full 8%, which is great. But let's say if the market drops down to negative 38% like it did back in 2008 with the recession, you know, that great recession and the housing bubble and all that, then you're going to be at zero. And zero, guys, is your hero, which means that if the market was to drop, you can actually save your money. That means your money's safe. It's not going to go down. It's going to stay level. And then once the market bounces back up, you're going to start gaining more on your money. Instead of, if you have it in a traditional 401k, IRA, 403 TSP or something like that, then when the market crashes, your money goes down. And if you, a lot of us, if we have 401ks, IRAs, all that type of stuff now, you're going to see that your account, your retirement account is down. It's down. Come on, guys. Like, for real. Everybody, I honestly suggest that you roll your money over into a fixed index annuity plan so that, like I said, your money is protected. You ain't got to worry about if your money drops because it's going to stay level the entire time. And once the market bounces back up, you're going to keep instantly gaining money. And plus, like I said, it's life insurance and you're still going to make money. You're going to make money off the interest, right? So now you have learned to become your own bank. All right, guys. I just want to point that out to you guys. All right. So the third way that you can make money, all right, for your business is through compound interest investments. All right. Now, these are investment accounts that pay you interest on your investments. All right. Now, compound interest is also known as interest on interest, is when you earn interest on both the money you saved and the interest you earn. How it works. Compound interest accrues at a greater rate the more frequently compounding occurs, which is why the more times you compound, the higher your compound interest will be. So there are several types of compound interest. The first type is called daily compound interest, and you guessed it, it's compounded daily. The next type is weekly compound weekly. The third type is monthly compound interest, which is interest that is compounded monthly. Then you have quarterly compound interest, which is compounded quarterly. And then you have weekly compound interest that is compounded. Not weekly. You have annual compound interest that is compounded annually, right? And we're mostly familiar with that because we all know about APR and all that type of stuff. All right. So I want us to take a look at this. All right. So let's say that you have $1,000. Okay. Let's say you have $1,000 from your business, or if you get your taxes back, you have $1,000 or something like that, but you just have an extra $1,000 to spare. Okay. So if you set this type of weekly compound interest, okay, if you set this type of account up, this is what's going to actually help grow your money. And this is going to be another way to become the bank for yourself. All right. So let's say you have $1,000. And let's say the percentage rate is going to be 3% weekly, and you're going to do it for 12 months. All right. You're going to take that $1,000 and you're going to grow it right now for 12 months. Okay. Now, as you can see, so let's say that, okay, this is January. All right. So next month, let's say February, after you put this money in, let's say February, you didn't earn $130, which is great. So now you have $1,130. All right. But let's jump down to month 5. Excuse me, guys. I'm sorry. Look, you are starting to earn you earn $211.06. So now you are at $1,842.44. And as you can see, the money, you see how it's compounding weekly, like it keeps going up and up and up. Now let's look at month 12. So at month 12, you made $498.56. All right. So your whole balance in 12 months. So by next January, you would have accumulated $4,334.52. Now I know some people are like, Brie, that is still nothing. I'm making more than that in my business. Okay, I get you. I feel you. But I want y'all to see something because I'm about to blow your mind. All right. So let's say that we look at that. We take that same $1,000 investment at 3% weekly, but let's say we're going to look at this for 10 years. All right. So the first year we already know, like you can see right there on line 1, the total earnings that you earned was $3,334.52. The balance that you have is $4,334.52. I love it. But let's jump down to year 5. Now you in the millions. You have $1,177,061.13, right? That you earned. So your balance is now 1.5 mil. Man, get out of here. From my $1,000 investment that I allowed to compound weekly, and I just did not touch it. I didn't take the money out right away. But let's say, like I said, down the line, let's say in 5 years you do need money, or you're trying to actually get money for equipment, or you're trying to get money to grow your business, or you're having a down season, you can go back into your actual account and pull that money out. Ain't that fascinating? So let's jump down to year 10. Okay. Look at year 10 though. This year 10 done blew my mind. You done made $1.8 billion. So that means if you don't touch your money in 10 years, right? You allow this to accumulate for your business for 10 years. Okay. Now your total earning is $2.3 billion. Man, come on, man. And I know some people right now is probably like, Brie, whatever. That is not, you are telling a lie, girl. You was telling a lie. I'm not telling a lie. This is real. I'm only going to tell you things that I've done. Okay. Now I'm not saying I'm at the $1 billion status yet. Okay. Me and my husband started our account last February, and we started with $540 investment. Okay. But I'll show you more about that down the line. All right. But our goal is to allow our money to grow and accumulate. Now that's for our personal account, but you best believe that with my business account now, I'm getting ready to set this up for my business account as well, so that I actually have money that is being accumulated. So now I have multiple streams. Now I have now I've become the bank for myself. You see what I'm saying? It'd be no stopping me. I don't have to beg nobody for nothing. I don't have to look for an investor. I don't have to go to the bank. I don't have to do that. That's what we're trying to do, guys. We're trying to bypass the system that's been created to really be against us. But now God is opening up the way. Because what? The first shall be last and the last shall be first. And we have been last for a very long time. But you know what? God is bringing it back around. And we are going to be first. But we have to implement these systems into our businesses. Do you see what I'm saying? As well as our personal lives. All right. All right. So let's go on to the next one. So this next example is daily compound interest. So this is a separate, separate account that I use outside of the weekly compound interest investment. So I have a weekly compound interest investment and I have a daily compound interest investment. All right. And so let's go ahead and look at the formula for that. So the formula for that is P, which is equals the initial investment, R, which is the interest rate, T is the time, which is either 60 days, 91 days, or 152 days, and A is equal to the amount of money per day. And then you have the dollar sign, which is equal to actual profit. So then you're going to take P times R, which is going to be the amount of money that you're making per day. And you're going to take the amount of money per day and you're going to multiply it by the time, right? So either 60, 91, or 152 days. So 60 days is 2 months, 91 days is approximately 3 months, and 152 days is approximately 5 months, right? Then you're going to take, so then that gives you the profit from the actual investment. And then you're going to take that profit and you're going to, or the, not the profit, you're going to take the initial investment and you're going to add it to your profit. Because one thing I love about this system is they give you your initial investment back and you get to keep the profit. So then, you know, you can continuously either take it out or you can reinvest and keep growing your money. All right. So let's do this first example. And this is an example that me and my husband are currently doing now because we just started this investment back in December when we first got introduced to it. I wanted to make sure it was legit. I was like, listen, let's make sure this is legit because I ain't doing this and I'm not going to put nobody else on this if this is not legit. All right. So anyway, we started with the $200. So you take the 200 times the interest rate that they give us, because the company gives you interest rates depending on the amount of money you invest in. Okay. So the interest rate is 2.5%. So that means we're making $5 per day. So $5 per day times 60 days, which is 2 months, gives us $300. So we get our initial investment back. So we take the $200 plus the $300, that gives us a total of $500. Now, at this point in time, like I said, we can pull it out. We can play with that money. We could choose to save that money or reinvest that money, right? But for us, we're going to reinvest the money, all right? And so let's look at this second compounding example, all right? So let's say we take that $500, or let's say you guys are waiting for tax time. You have an extra $500, or let's say you want to take $500 from your business. You can do that, all right? So you would multiply that by the new interest rate tier of 3.5%. So now that gives us $17.50 per day. So now with $17.50 per day, we're going to multiply that by 91 days. All right, because that's how long the investment has to stay in there. But you get paid daily. All right, I don't want nobody feeling like, oh my God, I gotta. Your investment's just growing for 91 days, but you literally get paid day after day after day. You're gonna see that $17.50 for 91 days. All right, accumulated in your account. So after 91 days, you're gonna make $1,592.50. Okay. Now, you're going to take the original $500 investment and you're going to add that to the $1,592.50. That gives you $2,092.50. All right. So let's just say that this is the amount of money we start with. So this is in 3 months. All right. We made $2,000 off our $500 investment. We came up with $2,092.50. But you know what? We're going to keep flipping this money because we're trying to grow our money and we're trying to get somewhere with our money, right? Especially for our business. So we're going to take that $2,000, $2,092.50, and we're going to multiply that by 5.5%. Now we're making $115.09 per day. Whew, per day, guys. Per day. But we're going to multiply that now by 152 days. Which is equivalent to 5 months. So now our businesses have accumulated $17,493.68. But wait, we're going to add the $2,092.50 to that. So now that gives us $19,585.68 for our total amount. So that's not bad. So in 8 months' time, your businesses, outside of your actual profits that you're making, right? Your actual investment on your business is actually gaining you $19,585.68. So let's say we're still not going to touch this money. We still want this to be our little cushion. So we're going to save this money. So we take that money, we're going to reinvest that money. So we're going to take that $19,585.68 and we're going to roll that over and we're going to multiply that by 5.5%. So now we're making $1,077.22 per day. So with that amount of money per day, okay, you're going to multiply that by 152 days. So if you multiply that by 152 days, you're going to get $163,737.44 in 5 months. So now in 13 months, guys, your business has literally went to $163,737.44. Now, of course, we're going to add that original 19,000 we had, right? That $19,585.68 to that. So now we have accumulated $183,323.12. Okay. So we do that. So now that's our total amount. And I know a lot of people are like, man, that's good, Bri. I don't even got to keep flipping it. I'm gonna touch it there, but I'm like, nah. Let's flip it one more time. Just flip it one more time. Just trust me. Just flip it one more time for me. All right. So we're gonna take that $183,323.12, and we're gonna multiply that by 5.5%. Now we'd have made $10,082.77. And we're going to multiply that by 152 days. Now you literally have made $1,532,000. $581.04. Ain't that believable for your business off a $500 investment? Now just imagine if you put more money in that than that. Whoo! Listen, you're going to be sitting nice. But of course, you're going to add that to your original $183,323.12, and that's going to give you a total of $1,715,904.16. Man, God, ain't that crazy? You can get that in just 18 months off a $500 investment from your business. And like I said, I wouldn't even just set this up for my business. I would set this up for my personal account. So my business would have this, and my personal account's going to have this. Come on, y'all. Come on. And this goes back to what I was telling y'all about taking apart, like if you qualify for that ERC credit, that's why I'm going to take that $10,000 out of that and invest it into this to grow my money exponentially and quickly. So like I said, when I have down seasons, or if I need extra money and I'm trying to expand and I'm trying to do that, I have that as a source of capital for me. I don't have to look for an investor. I don't have to go out and look for to be like, oh man, I gotta get my business credit together and I gotta do this. And I'm not saying that we shouldn't get our business credit together, but I'm saying is, oh, I gotta do all this, I gotta do all that. No. We're gonna bypass a system. We're becoming our own banks. We're making our businesses sustainable for ourselves. And that's what it's all about. All right, so let's look at one more example. Okay, one more example. And I didn't do the $10,000 example. I just did $1,000. Okay, so let's say that you want to invest $1,000 from your business. All right, and once again, the interest rate for that is going to be 5.5%. So now you're making $55 per day. You're going to multiply that $55 per day. You're going to multiply that by 152 days, which is 5 months. Now you done made $8,360, okay, in 5 months. You're going to multiply, you're going to add that to the original $1,000, which is giving us $9,360 for our total amount. All right, which is great. So this is in the first 5 months. But y'all know what we're going to do? We're going to flip this money because we trying to get somewhere with our businesses. So we're going to flip that. We're going to take that $9,360 and we're going to multiply that by 5.5%. And that's going to equal out to be $514.80 per day. Woo! So we're going to take that, and then that's going to multiply or compound for 152 days. And that's going to give us $78,249.60. Okay. So then after that, we're going to take that amount and we're going to add that to the $9,360, which is giving us a total of $87,609.60. So in 10 months, we made $87,609.60, which is not bad. Our business is really doing good, right? But we're still not going to touch that money. I know some people are probably going to be wanting to be tempted to touch that money, and I get it. Some people just going to do it anyway. You can still continue to do it. You're just not going to be at where everybody else is going to be at. All right. So let's say you take the $87,609.60. You multiply that again by 5.5%. So now your business is making $4,818.53 per day. How many businesses are doing that on a day-to-day basis, guys? Right? I know there's some businesses making that monthly. But daily, how many people thinking that daily? I don't know. I haven't, I mean, I've seen a few people, but not a lot of people. So we're going to take that and we're going to multiply that by 152 days. So now we have $732,416.56 that we made in 15 months. Of course, we're going to add that to our $87,609.60, which gives us $820,000 and $20,026.16. So in 15 months, we have $820,026.16. Woo! But y'all, like we said, I know at this time, people probably gonna be like, listen, Brie, I'm good here. I ain't got to get to the million. I'm like, okay, that's cool. If that's you want to start pulling out, okay, do what you do. But for here, if we take that and we allow it to accumulate for 5 more months, all right, so we take that $820,026.60 times the 5.5%. Now we done made $45,101.44 per day. Then we multiply that by 152 days. Y'all hear me? We multiply that by 152 days. All right. Now we have accumulated $6,855,418.88. And I know people are probably like, what? People are probably still tripping over the fact that they're making $45,101 per day. People can't even make that in their own on their own jobs. I know some network marketers are making that on a monthly basis, right? But they ain't making that on a day. Come on a daily basis? On a daily basis. Come on. Anyway, so then you take that, and then, like I said, we add that to that amount. So now we're at $7,675,445.04. That is blowing my mind. So now you have, in 20 months, you didn't accumulated $7 million for your business that can be used as an extra cash reserve, that can be used to help to pay for new electronics, that can help be used to pay for your employee salaries, that can be used for whatever you need it for as your business is expanding and growing. If you're trying to expand your business, you want to franchise your business, if you need to get lawyers or whatever, you have the money to do it now in your business. And I know a lot of people are probably like, Brie, whatever, these numbers are exaggerated. And I'm just like, okay, well, like I said, to each his own. You don't have to do that. You like I said, I've given you 2 other options. You can just do the ERC and be okay with that, right? If you actually qualify for it now. You can do the life insurance policy. Life insurance, you can't go wrong with life insurance. It's the safest thing out of all these. All right? It's the safest thing. But I do want to actually show you guys my actual results, because I don't want nobody to say that I did not show them receipts, because I'm giving you receipts. All right, I'm giving you receipts in this season. All right, so like I told y'all, February of 2022, me and my husband invested $540. As you can see now, our $540 has turned into $3,459. And then right here, what you guys see, that $92.54 from our bonus account, that's how much we made that week. So that's how much money we made. We get paid every Friday. So every Friday, I know I'm gonna have something in that bonus account. You could choose to take it out, or you could choose to let it grow. We allow our stuff to grow because, like I said, when we showed you the numbers, we're trying to get somewhere. We're trying to become billionaires in 10 years. All right. Actually, we'll probably be able to get there sooner than that, but you see what I'm saying? We have extra streams of income. Okay, guys. So once again, I know some people don't want to see some extra receipts, and I know you really can't see the numbers, but I just kind of want to show you guys. I think that says February 12th, we were making like $2. February 4th, we were making $16. So it's not, it accumulates over time. March 9th, what is that? Yeah, March 25th, we're making like $19. All right. All right. And then I want to show y'all. So December, look, in December, we was making like $87. There's a couple times where the market did a little bad right here, where it was like, December 30th, so only made like $40. But it's consistent because it pays me weekly. Like my investment pays me weekly. So So I don't ever have to worry about, oh my God, is my investment not paying me? Like, no, it pays me every Friday. That's one thing that I love about this. And this past week, like you said, like you saw, the $92, right? So, which is great. Now I want to show you guys our actual compound interest investment. All right. So with that being said, I told y'all we started off with we invested the $200. It showed you up here we're going to make a profit of $300. So of course combined we're at 500. Right now it shows us the total amount of money returned. So right now we have accumulated $170. All right. We started this on December 10th. The investment will finish paying us out on February 8th. All right. And like I said, it's the 2.5% investment, guys. So like I said, I'm only going to show you stuff that is legit. I don't want you to be like, oh my God, like really, like, no. You know what I'm saying? And I suggest everybody hop on this now before, more and more people start to hear about it. And then, you know how people do. These systems will hurry up and change in a heartbeat. But right now, no. If this is a way that God is going to allow us to come into the promised land, especially as African Americans, bless me, guys, I'm sorry. Especially as African Americans, I say we need to take a full advantage of all these systems, everything from insurance to these compound interest investments to the ERC payment. Let's set ourselves up. Not just ourselves, but our children and our children's children. Let's have so much wealth and so many properties and so much stuff, right? That now we have truly become the Black Wall Street again. We don't even need their system. We have our own systems. Come on now. I'm telling y'all, and y'all know some of y'all are probably like, oh my God, this can really be a possibility for me. Yes. That's why I wanted to come on here and do this. But like I said, I have to do my due diligence and my own research. I don't want to introduce stuff to y'all that I have not done or tried. Okay, I really want Bree Smith Financial Group to be a company that is based upon integrity. And guys, I'm not going to like I said, I'm not going to show you stuff that does not work, has not worked for me. Because if it don't work, you best believe I'm throwing it in the garbage. And so, but like I said, I'm very excited about this. I'm excited for you, right? I'm excited for you. And I pray that you guys have enjoyed this presentation tonight. If you're interested in learning more about the ERC payment and would like to get in contact with my Connect, please reach out to me. Like I said, only apply if you're a legitimate business who was established before or during COVID and your business was affected by COVID. That means you need to be registered with the state as well as with the IRS and have an EIN number and a business bank account. You cannot use your personal account for this. You also have to be current on all taxes, okay? Regardless if it's federal, regardless if it's state. You have to be, whatever fees that you're supposed to pay, make sure you're up to date with all that. Also, too, if you qualify for this money, go ahead and build a budget around this money. Allocating your actual salary, how much you're going to pay yourself, and what you're going to be putting towards your business to help it grow, to help fund it, all that type of stuff. If you got to get supplies, if you got to get a building, all that type of stuff. If you got to pay for advertising, okay, or different materials, electronics, whatever, make sure that you're making a budget around this money. And also, like I said, there's nothing wrong with taking cash withdrawal payments. But like I said, we want to look as legitimate as possible. So I honestly suggest people putting themselves on payroll. If you're not already on payroll, go ahead and look into establishing that. You can go and look up like ADP or something, or you can research other payroll companies. But you can definitely get with ADP and they'll set you up, tell you everything you need to get started and things like that. Also, please, please, please make sure that you have a bookkeeping system in place. So get QuickBooks. If you understand how to do all that stuff on your own, by all means, just get QuickBooks. Make sure you're running your reports. Make sure you're keeping everything in order, right? I even suggest getting a CPA, a certified public accountant. So at the end of the year, Uncle Sam is getting what he needs, because like we ain't trying to be people that got all this money and then people just like, oh my God, you know what I mean? Like the IRS hits us with a big tax bill and we crying and hyperventilating because we didn't do right. Like, no, let's do right. Okay, let's pay Uncle Sam their portion of their pie. But make sure you find a certified public accountant that can help you find tax breaks and different things like that and all that. All right, different tax credits, things like that. I'm not a tax professional. That's why I'm telling you to go see a tax professional about that. All right. And then if you don't have, like I said, if you don't understand how to set up that on your own, like a bookkeeping system, please go get you a professional bookkeeper in your actual city and town. I mean, I know there's some places you can, if you want to do an online one, but I suggest actually finding somebody that you can physically go into their office. You know that they physically legit, they doing some funky stuff behind the scenes. I say go into their office space and be like, all right, you know, working with them like that. So then they can give you monthly reports and things like that on how your business is doing and operating. Because you always want to know the financial health of your business, right? You want to know the financial health of even your personal finances. You need to know that. All right. But I suggest actually getting a professional bookkeeper to actually do that stuff for you. And the reason why I'm saying put all these systems in place, because there is a chance that you could get audited by the IRS because you took this ERC payment. But I want to make sure that you are well protected, that if you do get hit with an audit, you good. They're going to be like, oh, well, she used her money, or he or she used their money for a good purpose, for a good reason. Like, okay, well, they did what they need to do. All their stuff is legit. You know what I'm saying? So that's all I'm saying. Just make sure it's legit. Don't be going out here, like I said, doing like these people did with the PPP loans. People making up fake businesses, doing all this stuff. People try to go on these fancy trips. People try to get their teeth done. No, we ain't doing all that. We doing this to build our business, to build our wealth. All right. Also, too, like I said, if you qualify for the ERC payment, I honestly suggest that you take a portion of your money, your income. But you don't have to. So don't say that Bree told you and made you. I didn't make you do anything. I just suggest that you do it. Like I said, I'm going to take, when I get mine, I'm taking $10,000 and I'm going to invest it in my compound interest so that I can actually grow money and have more money. Now, of course, there's a thing called capital gains tax and things like that. But we can talk more about that in an actual consultation. I can kind of go deeper into that with you on that. All right. But yeah, you could choose, and like I said, you ain't even got to use the compound interest system. You could choose the insurance or whatever, right? But just please know that when you invest, there is a risk, because I don't want people to be like, oh my God, I invested, Marie, something happened. Listen, there is a risk. But like I said, I like these systems. I don't like investing directly into the market. I like systems that are actually going to pay me out consistently from my investment, because then I know that my money is safer. Do you see what I'm saying? I'm saying safer. I ain't saying it's safe, but it's safer than actually me putting my money directly into the stock market. Do you see what I'm saying? Because I'm using this actual compound investing system, right? Okay. Well, also too, guys, last but not least, if you are a sole proprietor, you can apply for this ERC credit, because I know some people are going to be asking me, Bree, can I really apply? Yes, you can apply. It's all good. It's all good. Okay. It's all good in the hood. Go ahead and apply for the credit. Okay. You are an employee of your business. Okay. So if you're interested in learning how to set up whole life policies for your business, so you can actually begin to use it as a form of savings. And like I said, as another way, as a safer way to be able to create your own banking system, please hit me up. I would love to have a consultation with you guys about that. And last but not least, if you're interested in learning more about the compound interest investments that I use, please hit me up so I can help set you up. You know, I can set yourself up personally. I can set your business up or your ministry up as well. So you're not, like I said, ministries can use this too. So you're not always having to depend on tithes and offerings. People don't always have that type of stuff. You know what I'm saying? So then you ain't got to worry about that. You have a whole stream of income, and then your church lights and the bills and the obligations that you got to pay for your church building is paid. You ain't got to worry about it. That's all I'm saying, y'all. So hit me up. Like I said, I would love to connect with y'all. My email address is bree@breesmithfinancial.com. Please check out my website, breesmithfinancial.com. Also, too, follow me on my Facebook page, Bree Smith Financial Group. I'm also on LinkedIn, so hit me up on LinkedIn. And then we have a new YouTube channel, which is Bree Smith Financial. I'm also on TikTok. I'm also on IG. TikTok is still Bree Smith Global, but I also have a separate account at Bree Smith Financial. And then IG is still Bree Smith Global, but you can also hit me up on Bree Smith Financial as well. And please, guys, go ahead and like, share. Let's get this out to as many people as possible so that they know that they can now become their own banking system and they can bypass the world's systems. All right, let's do this. All right. Each one, teach one. All right, guys, be blessed. Until next time. Bye.